Live from the Rant Radio Network,
You're listening to Real Estate Rant with your host, Alex Alanis.
and your co-host, Mr. Alonso Rodriguez.
No problems, just solutions for real estate needs, hot topics, and controversial chat. And rolling. Thank you for joining us here at the Real Estate Rant, the towers of the Rant Radio Network.
The holy grounds.
The Holy Grounds. I'm your host, Mr. Alex Alanis. And to my left here, my broker, Mr. Alonso Rodriguez. And I'm getting really good at saying that. Joining us in studio today, Mr. Frank Williams, Business Development from Citadel Service Corp. Good morning, Frank.
Good morning, Mr. Frank.
Good morning.
And Mr. Frank will be joining us today and talking about alternative lending. We haven't had a lender on the show yet, oddly enough. You would think in real estate we would have somebody come on about lending, and haven't had a chance to do that too much, have we? We've covered a lot of other things, though. Like what was the word of the week a couple weeks ago? Creosote. I'm still kind of weirded out by that.
So for the chimney backing, or it has something to do with chimneys, right?
Well, the creosote is the buildup. When you burn wood, it builds up on the inside of the chimney.
It creates a fire hazard.
It creates a thick, I don't know, what would you call it? A thick
I don't know, a layer
buildup, right? And that could eventually cause a chimney fire.
Right.
So I thought that was interesting. It was an interesting topic. So anyway, make a long story short, let's get the show started. Coming up on the design deal, if you would, Mr. Manti Pantalones, you can win a $25 gift card to Stevens Steakhouse located in the City of Commerce, compliments of Carlos Cruz and Bell Gardens Chamber of Commerce, or you can win a $200 gift card with Garden Dental Teeth Whitening. They're at 7218 Garfield Avenue in the City of Bell Gardens. Give us a call, 855-693-4897. That's 855-693-4897. If you get on the show, we'll give you a gift card or a pat on the back, whichever you like. You can also email us at realestaterantradio@gmail.com. Now, we won't get to your email during the show, but we will try and answer it on previous shows, which brings us to Mr. Alonso. What do you got for us today, sir?
Q&As.
Let's do some Q&A.
All right. Well, this one comes out of Sandra out of Costa Mesa, and it reads, what does a home inspector do, and how does an inspection figure out in the purchase of a home?
Ooh, okay. Well, I'm not a home inspector, but I think I can cover this a little bit. Home inspector goes out and does what we call a cursory inspection. A cursory inspection means that individual who is inspecting the property is not an expert in that field, any particular field. In other words, he's not a plumber necessarily. He's not an electrician. He's not a roofer. Those would be expert fields. An inspector goes out and checks those same items for any deficiencies. Now, if he happens to see a deficiency, then they will make a recommendation on getting an expert in that field. So let me give you an example. Let's say that there's a plumbing problem. Well, any one of us can go out there and see, feel underneath the pipes and say, well, this is leaking. Exactly. So I make a recommendation to have a plumber go out to that property.
I believe also they're checking for any safety issues with the property, and they actually will determine a price. They will give you like more or less an estimate of what it's going to cost you to fix it. They're not, like you said, they aren't contractors or anything like that, but they're more or less give you a ballpark figure of what's going on with the property.
So in terms of answering the question, the person's asking how does it affect value, or
Well, they're looking for functionality issues. I mean, they want to make sure the windows are working, there's not broken, the doors are sliding, all those things. That's what you're talking about, those estimates.
Yeah, well, but I'm trying to answer the caller's.
The question is, how does it figure in the purchase of a new home? Basically, it's giving them peace of mind of what they're getting into. I mean, it's not required. It's by absolutely no means required. It can be waived.
The inspection can be waived.
The inspection can be waived.
Okay.
So I believe that's what the question is. Is it necessary, or what is the purpose of having one? And basically, to my knowledge, it's basically peace of mind and to know what you're getting into.
Well, as a broker, I definitely recommend an inspection. I always tell the buyers that I work with, it's fairly inexpensive. It's kind of like a small insurance policy because most of the inspectors are bonded and insured. And if they happen to miss something, guess what? They're insured. So it's one of those things that a lot of times it revolves around discovery. You might not discover something on a property for 6 months, mainly because, you know, let's say it's a air conditioner, but you're in the middle of winter when you close.
And
You're-
not
you're
only
laughing,
that,
Alonso.
you know, one interesting thing it came to my mind that one of my agents brought up, and she kind of told me, you know, she was kind of glad that she had the buyers choose her inspector, you know, because usually if we choose her, we try to give them a recommendation of an inspector to choose, then guess what? If something's wrong with that property and it wasn't disclosed, then they try to blame it back on you.
Like they're in cahoots or something.
So what ended up happening with this it was like out of coincidence, and she told me she had learned something was that from now on she's letting the buyers choose her home inspector for the reason why something was discovered, an electrical problem was discovered after the inspection was done.
Show me some respect, boy.
Then after the inspection was done, you know, electrical problem was discovered. So you know what? Guess what? Thanks God that, you know, she didn't recommend some, but they chose their own, and they found out for their own for their own knowledge that it was wrong with it, and they replaced the whole electrical issue. It was resolved. But the point I want to make across is it's better for them to choose than us to try to.
Yeah, and it actually allows the agent
recommend
now,
one.
It allows the agent to now do what they're supposed to do, because they didn't pick the inspector. So all the agent's going to do is, well, okay, we can address this with the seller and possibly renegotiate the price or get it fixed, put it in a request for repairs. But it allows the agent now to do what they're supposed to be doing on that transaction. So anyway, give us a call, 855-693-4897. Let's throw up the design deal. Are we ready for that, Mr. Pantalones? 855-693-4897. Here's the design for the day. We've had this up, I think, for 3 weeks, and oddly enough, nobody's called in and won the gift card. Again, a $25 gift card to Steven Steakhouse or a $200 teeth whitening, and there's Mr. Steven. We have had some actually lunch at Steven Steakhouse. Have you ever had lunch over there, Frank?
I've had excellent lunches and dinners there.
Yeah, you know, I was pleasantly surprised. The pastrami over there was quite delectable, I'll tell you.
Maybe if someone doesn't call in today, Alex, we'd probably go use one of those gift cards.
I got a feeling that's what's going to happen, right?
That might be a good plan.
Yeah, exactly. So, again, give us a call, 855-693-4897. You can give Mr. Frank Williams a question, or you can ask us a question, or you can let us know what you think that particular design is. Mr. Frank, interesting topic today. Like I said before, we haven't had a lender on the show, and we were talking a little bit before the show about, you know, when I was interviewing you for the topic today, how interesting it was to hear your perspective on the lending practices, because, you know, I've been in real estate 25 years and never really been in the lending field necessarily, but it's refreshing to hear that expertise. How did you get into the whole lending arena? I mean, what guided you into that?
Well, my background, I originally was starting in the automotive industry, back working for a major company, back when corporations actually trained their employees. I had a small company with the initials Dun & Bradstreet, offered me training on how to read 1040s, financials, create performance, and whatnot. So I finalized that I had a knack for finance, and jumped into the industry in 1990. Been in the industry over 20 years, and I found the challenges of putting together residential and commercial lending, but also found the rewarding fact of helping investors create new assets for long-term wealth planning, or just the simple have somebody obtain the American dream by obtaining their first house. And I was raised in a family where, unfortunately, you know, there's only one house, you know, and that's usually grandma's house, and it's one house in the whole family that we never knew our own real estate. So I thought that being, seeing what's going on growing up, and seeing how, especially with the size of my family, I have a big family, 4 boys, one daughter, and I just thought, in order for me to do what I need to do to take care of my family, I need to do something that I love and that is challenging, and every day is absolutely different from yesterday. Maybe similar, but
now I understand that now that you've actually evolved now into I guess what you called an alternative lending.
Correct.
How is that different from? Well, let me start with this. This is a family-owned business.
Well, okay, my background first started in traditional mortgage banking, alternative, Alt-A. They called it subprime. They called it ABC paper type lending. I never really went directly into institutional lending, which is your regular, what we call Fannie Mae, FHA type lending. As the business and the credit crisis basically came to a screeching halt in 2007, our family business had always been involved in alternative lending, starting as late as 1998. So as a side family business, evolving over time, and when I always say we came out of the ashes of the credit crisis. Our family business, based out of Pasadena, is Capital Direct Funding. My daughter runs that company actually, and they just specialize in residential and commercial lending. Now, our business with Citadel is another offshoot of the mortgage banking business that I did for almost 10 years, and that evolution is really dedicated toward what we're talking about: alternative lending for residential and commercial.
Yeah, I'm just trying to delineate the difference
Right.
between
So
what's hard money and what's.
Well, that's what kind of got me confused. Family business. When you say family business, it kind of puts me on nerves. I'm looking at the family. Does they mean the mob or is that kind of family, the Gotti family? Or
No. You know what's really awesome is that I have the benefit of this, and let me kind of give you back to the breakdown. Is that you have regular, what we call institutional lending. This is like Chase, Wells Fargo, what we call A-paper lending. And then there's also government or GSE business.
that would be considered traditional financing,
Traditional institutional financing. Even FHA and VA lending is actually classified as standard institutional because those loans are actually being sold back to the government. They're insured by the government. Okay. Now, what we have is alternative portfolio lending. So when we talk about our family business,
that means it's yours. You're going to keep it and you're going to service it.
It's our cash. It's our family. We have a group of investors. We've been working a long time. Our family business, we lend on residential and commercial properties. We service it. We do
I hate to interrupt there, Mr. Frank.
Go ahead.
We're coming up on a break.
Don't touch that mouse.
All right.
Stay tuned. We'll be right back with some more Real Estate Rant.
Building a custom home or business is a huge deal. For some, it's the largest project they'll take on in a lifetime. Choosing your team may be the most important part of ensuring a successful building project. Starting a project by working closely with Core Design will create what's just right for your lifestyle and your property. But selecting the right builder is perhaps the most important part of creating the team. At Core Design's customer service, quality craftsmanship, and integrity are the keys to our company philosophy. Your custom construction dreams are just a phone call away. Core Design at 213-453-1609. Once again, that number is 213-453-1609.
The experts know that for pastry, Baker's Bodega has it all. Exclusive brands like Westco Bankmark, Satin Ice, and Pastry Pride. One-on-one day seminars for cake decorating and gelatin art. So for our service, wide range of ingredients and supplies, and for the low prices, Baker's Bodega has it all. But you don't need to be an expert. Baker's Bodega, 7869 Paramount Boulevard in Pico Rivera. Come, we're waiting for you.
Do we have your attention? When it comes to tequila, two things matter: heart and passion. Never compromising integrity for mass production. Number One Tequila delivers the goods. Taste the heart and passion of Mexico in every bottle. We make it right. We make it fun. Superior Tequila. There's only number one. There's only number one. There's only number one.
A home is the biggest investment in most people's lives. Buying or selling should be a positive experience.
Whether you want to be a wealthy real estate investor or just trying to find a place to call home, at AJR & Associates, we focus on the client's needs.
We understand the market better than most. Let us bring the value to you and make the right choice.
AJR & Associates, making your dream house a reality. Call us today for a free consultation at 562-882-1976. Or you can log on to www.agrrealtors.com.
with a track record of great results, bringing knowledge, wisdom, and expertise to you. Hablamos Español. Live from the Rant Radio Network,
You're listening to Real Estate Rant with your host, Alex Alanis.
and your co-host, Mr. Alonso Rodriguez.
No problems, just solutions for real estate needs, hot topics, and controversial chat. No problems, just solutions.
Just solutions, huh?
Yeah,
Let's solve this.
we are here to
let's
ensure-
solve this mystery of the lending institution.
We are here to ensure the public trust, like we always say here in the Real Estate Rant Radio, here at the towers of the Rant Radio Network. Joining us in studio today, Mr. Frank Williams with Citadel Servicing Corp. He's in business development and certainly developing his business today on the show. You can reach him at 626-688-8444, or you can also reach him at 949-887-1087, which is up on the screen if you happen to be watching. You can also email Frank at frank@capital-df.com. And I'll read that again. For those who don't know what a hyphen is, it's the kind of what you see like on
Little dash.
on the phone number. Well, I always get confused between dash and hyphen, so it is a hyphen, so I'd rather call it that. So Frank at capital-df.com.
Before the break, we left off, and we're trying to distinguish what the difference was between the traditional financing and the private portfolio money. Can you give us a little rundown on that?
Yes,
Frank?
actually, what we're talking about is the banks have to follow all the requirements for the institutional lending. The portfolio, alternative lenders, private lenders, we create our own guidelines, and they're a little bit more flexible because they're not as credit based. They're more asset based. They're more based on the property. They're more based on cash flow. So let's talk about these alternative lending products that we're introducing.
Well, I think that the common word used is collateral based.
Correct.
Yeah.
We're looking at the condition of the property, and that's why there's different roles for different lenders, and that's why truly being used a mortgage professional, and I'll use my background as an experience, but we always like to address ourselves with different mortgage professionals. Now, with Citadel, I service directly the mortgage professional. In other words, I work directly with other mortgage brokers, mortgage bankers that are trying to find our financing, our money, in order to put borrowers. And I'll start with one example. You have a self-employed borrower that has excellent credit or above average credit, has excellent cash flow. Unfortunately, because of the nature of their business, they're unbankable. In other words, they cannot walk into Chase or large institutional bank and obtain financing just because their financials and the amount of expenses their business expense prohibits them from qualifying for legitimate, or shouldn't say legitimate, I should say institutional type financing. All funding is legitimate, obviously, once it closes every quarter.
And the reason
Well,
being,
that's questionable, isn't it?
and the reason being is because a lot of business owners don't report all their income, or maybe it's because they're deducting too much expense. Would that be the scenario?
Well,
or?
I'll just use this last 5 years of the economy. I mean, most businesses right now have been in survival mode and have enormous losses that they've been taking and absorbing. I have different investors and different type of climates. I mean, of course, my name is Williams, but I'm of Latino descent.
Yeah, that kind of threw me off a
I know,
little.
you kind of threw hablo español, claro que hablo español, soy Latino. I think the importance is that when you have a self-employed borrower that's unable to take advantage of all these low interest rates, all these excellent buying programs, us as private investors and the income that's out there, the money that's out there, has to be able to find a source. I mean, you have self-employed borrowers that want to buy properties, but they're unable to just because they don't have the cash to pay 100% cash. So that's why I feel so passionate about the lending that we're offering, because we could use 24 months bank statements to cash flow their business as opposed to their financials that they're filing with, because obviously you can see the cash flow, you see how they pay their credit, and we have different credit scales. I mean, you have the different credit buckets all the way down from 500, 600, 700. I mean, everybody has their different scale with the credit score, but for us, it's about more like cash flow and about their ability to pay.
Now, why wouldn't the conventional financiers look at it that way? I mean, it sounds logical.
Well, it is. You think it's logical, but remember, who in essence is actually buying the properties? I mean, buying the loans. The loans is being bought by the government. And unfortunately, that has been going on for quite some time, and it's just a direct result of the credit crisis. You see, when you had Wall Street and you had different players coming in buying all these mortgage-backed loans, it created a demand, which that's when what created all these different type of exotic loan products that did not make sense, where everybody's talking about 100% finance.
That was
80-20s?
80-20s.
That was a surplus of money that was happening because everybody wanted to get into the business.
Right.
Let's print some more, right?
So I think right now when you have private, like our family-owned business, and we have our business that's going on, we're lending our own capital, and we have institutions like Citadel that's helping mortgage professionals obtain products. It's about what makes sense. You have somebody now that is putting 20% down, 30% down, 25% down. You have somebody that has something to lose that is going to want to make sure that that's what it used to be. That's the way it used to be.
Well, that's what we call a vested interest.
You have a vested interest in the property because you have something to lose. And we look at, and just by the legislative rules, and we'll segue into that we have to put together funding for residential, for primary residence lending that makes sure that we can show, beyond a shadow of a doubt, that they can service this debt for a minimum of 3 years.
And like they say, like that's a good example of it's easier for someone to walk away from a 3% down payment than giving a 20% down payment loan. They're
right, and there's different attitudes. I mean, you know, when you're dealing with an FHA at 3.5%, which is probably going to be eliminated here soon, it's going to be 5% here shortly. Just to kind of give you the heads up, the essence is what you're taking a family like like ourselves, our family when we first started, did have no assets, no properties, no nothing, and then go out and put 5% down. You took a while to save that. You had a vested interest because you know what? That was going to be your family home, and that was your American dream.
That's your nest egg.
That's your place where your kids are going to grow up and go to school, etc. So I think that's a different type of vested interest. The vested interest for the self-employed borrowers and for the investors and the people that we service on both sides of the fence, with our family business and with the new mortgage professionals that we're doing in multiple states. We just opened up Florida, Texas, and we have all the western states. Oh, wow. And it's really key, and I kind of tie this, it really keys to the influence of the buyer. And I'll reference, I'm also on the board of directors for NAREP, which is the National Association of Hispanic Real Estate Professionals. I'm very proud to be part of the Los Angeles chapter. And one of the key parts of our mission statement is sustainable home ownership. And that is something that when I read that and way back in the, probably more than 8, 9, 10 years ago when I got involved with NAREP, that really sunk into me because it wasn't just about closing a deal. It wasn't about just putting a deal. I'm very proud of the loans that I put together because a lot of those families that I did were minority, were Latino, were Asian, were different types of families that didn't really use credit. In other words, they were being penalized by the institutional lenders because they paid cash and they didn't generate credit. And because they didn't, they weren't able to qualify for institutional lending. So that's why there's alternative lending that we have in place makes sense. You can pay your rent, you can pay this, you have your cars that you're paid for cash. Those all mean something to an alternative lender because now you have a capacity to pay. It's not like you just sit there and, you rub 2 nickels together and now you're all of a sudden buying a house at 100% financing.
Now here goes the curveball, Frank. Now what's the difference between the rates? What kind of rate increase are we seeing with these non-traditional lending? With the hard money lenders, are basically what you guys.
Let me kind of address that real quick first about hard money. Okay, when I first got into the business, the hard money lenders were really short-term lenders, and that's really no different than what we're talking about right now. We're talking about lenders that offer notes for 6 months, a year, maybe 18 months at the most, because they have limited capital, so they have to charge a lot. They have to make their income and get their money back in order to do more loans. Now our family business is built on long-term, so we're more. I like to use the classification as private money, soft money, because we're more like 3-year, 5-year, 15-year type paper.
So because it's you're an extended term versus a hard money.
Exactly, because what I say private money and alternative lending is mainstream now, and it's not going to go away. And that's a different asset because you have somebody that's willing and has the capital behind them to do long-term lending. Then you have the alternative lending, which is the next layer up. And then you have institutional lending. Now, there's always a cost. Now, okay, so let's go back to your question about rates. When you sit back and look at a subsidized discounted interest rate that's being put out in the market today, and when I say subsidized is because when you have Bernanke make comments to influence which way the rates are going to go to spur home buying to help keep our economy going, okay? All right? So those rates right now, there's a benefit and there's a cause and effect. Well, the effect is you have a lot of individuals that rely on interest to survive their income cannot take advantage of these low rates, so they're finding other yield as an investor. So there's two sides.
You
right?
need to get that, Frank?
No. Go ahead, bud. Sorry about that.
No, it's okay. I'm
look
kidding
at-
around with
I
you.
look at
Answer
that.
it might be God.
Yeah.
I look at
You
that.
never know.
If you sit back and look at what's going on with interest rates, the true cost of money, what the true cost of funds are, and what rates really should be at, okay, at these historic levels, I mean, it could still be at 5.5, maybe even 6 as an institution. It'll still be historic levels, okay? So usually the alternative market is about 300 to 350 basis points above what the standard market is. Okay, so if the true cost of money is around 5.5, you're going to see alternative lending anywhere between 300 to 350 basis points. So you're looking at 8.5 to 9.5. That's usually the range. Private and alternative lending, that's going to be what I call soft money, is going to have an overlap, and those are going to be between maybe the high 8s to the low to the mid 10s. That is usually. Now the hard money guys, you'll see them at 12 and 13 and higher. Okay, those are the
the short-term
And
notes.
those are the short-term. Those are the short-term loans.
Yeah, because usually those are ones that the investors are using to flip properties and use that type of financing for a quick transaction.
Right.
No, I'm seeing that you're filling the gap. You know, we talked about institutional lending, we talked about hard money lenders. There's always been this gap in between them, and you're kind of you've kind of found the niche, if you will. We got about 20 seconds, but just
Right. Well, I mean, if you sit back and understand that not only are we finding a niche, but we're trying to make it easier. So in other words, instead of going through the normal exhausting process of trying to get a loan, we simplify it and streamline it because it makes sense. So if you're a wage earner, you just straight up, oh, looks like we got to go.
yeah, it's all right.
Okay.
Coming up on a break. Don't touch that mouse.
All right.
Stay tuned. We'll be right back with some more Real Estate Brand.
Nurses Life Express provides unique apparel for all the hardworking nurses that wear many hats. It's apparel that expresses nurses' amazing, humorous, and caring personalities. After all, nurses are as influential as their united goal to help others. Nursing's not easy, but somebody's got to do it. For more information, please call 562-270-4312 or visit their website at www.nurselife.com. www.nurselyfe.com. Nurseslife.com, where nurses' lives are expressed.
3 balls, 2 strikes, the pitch. Swing and a rock.
Make your team look like pros with custom lineup cards. Whether you are a travel team, rec team, all-star team, or just some old guys playing slow pitch, we can make your team look a little better with some custom lineup cards. For the umpire, for the opponent, for the scorekeeper, for the dugout, no matter where your lineup card goes, you will look like a big league team with your team logo and name on top of your personalized lineup card. Just visit CustomLineupCards.com. With the best prices in town, you are sure to hit a home run with us. Visit CustomLineupCards.com and go pro.
Are you watching the game at home? Why? Come watch it at Mambo Grill, the hottest spot in Downey. You'll have good food, drinks, and a great time at a low price. We have the coldest beer in our sports bar, where you can enjoy the game on any of our huge flat screen TVs. And when your home team wins, you get 25% off anything in Mambo Grill. We're on Downey Avenue, 1 block north of Firestone, or visit us on the web. Mambo Grill, love at first bite.
Hey, bro, this is a good game. You know what would make it better?
What, bro?
A michelada.
A michelada? What's a michelada?
A michelada is somewhere in the middle of a Mexican Bloody Mary and a Mexican margarita.
Oh, I got you covered, bro.
You got a cup in your pocket?
No, sir. I got my pocket-sized michelada. Mucho macho michelada.
Pocket size?
Pocket size, so you can take it with you anywhere you go.
Where'd you get that at?
At the nearest convenience store, and you can also buy it at muchomachomichelada.com.
You know what will make it better? After we get drunk, if they had a line we could call.
We can call their drunk line. You can leave a message and then log on to the site and listen to your stupidity afterwards.
What's that number?
It's 855-MICHE-69.
What's that number again?
855-MICHE-69.
Awesome. Mucho macho michelada.
What's up, guys? Sports Guru
and Butt Knocker
from the Sportscast, Wednesdays, 12 to 2 Pacific on Rant Radio Network.
We got everything you need to know about sports. We got all the latest video highlights. We got You Got Knocked the Fuck Out. We got Bonehead of the Week. We're talking sports, drinking beer, and having a good time.
If you missed the show, go to rantradionetwork.com and listen on demand. So check us out every Wednesday, 12 to 2 on Rant Radio Network.
Live from the Rant Radio Network, you're listening to Real Estate Rant with your host, Alex Alanis,
and your co-host, Mr. Alonso Rodriguez.
No problems, just solutions for real estate needs, hot topics, and controversial chat. And yes, it is controversial chat today here at the Real Estate Rant at the towers of the Rant Radio Network. I'm your host, Mr. Alex Alanis. You can give us a call at 855-693-4897. In studio today, we have Mr. Frank Williams with Citadel Servicing Corp. You can reach him at 949-887-1087. If you're watching, it's up on the screen. You can also email Frank at frank@capital-df.com. We were at the bottom of the hour now. 2 segments gone. It goes by really quick. 2 segments left, so let's
get back on the
let's
topic.
try and cover some ground here because I'll tell you, listening to Frank is very interesting. We left off on wage earners.
Wage earners, Frank, can you fill us in? Or we left off?
Process of the loan.
Right. Well, what I wanted to get to was the actual process of the loan is also changed with alternative lending due to I'll say the onslaught of what happened in the credit crisis. The regulations, and because of all the overlaps of what lenders actually create. Now, and I'll backtrack just a little bit. Fannie Mae, Freddie Mac, FHA list out requirements that they'll buy the loans. Okay? Then what happens is a mortgage banker or company will sit there and say, we'll go ahead and do this, but we'll create more restrictions to make sure that the government's going to buy the loan and that they perform, because there are reps and warrants that they have to make sure for performance. So they'll create what they call an overlay.
And that's why it's so tough to get a loan nowadays.
Yes, it's so tough. And what I was getting to with wage earners is the benefit for mortgage professionals to understand, and this is what I spend my day trying to instruct mortgage professionals on how our process is. We still have a process. We still have capacity to pay requirements. The issue is the process. So let's talk about the wage earners. Wage earners, normally, you have to have a W-2, check stub, tax returns. They have to been filed. We have to get a verification from the IRS that they were filed. They have to match
to 4506.
4506Ts, exactly.
So you guys are 4506 in your files still.
No, that's institutional. That's institutional. Okay. That's not us.
So you guys on 4506?
We don't 4506.
So are you guys considered the new subprime or?
No, it's not subprime.
Now just to clarify to the listeners, Frank, what is a 4506T?
Okay, a 4506T is a form that you're actually giving permission, you're signing authorization for you to verify with the IRS that the tax returns that you filed, for us to verify what they filed with the IRS. Okay? So now, okay,
so
now I take
that
exception.
Way I'm not giving you a fake tax return.
No,
right?
exactly. You're not giving me a juiced tax return. Okay,
I like that term, juice. Right.
But the key is that you not only have that, but then there's other ramifications. Okay, so now because of what's going on right now in politics, do you think the government might have to lay off people? They might have to have these work furloughs. Well, guess what? The IRS has had a number of furloughs, so there's been a lot of files hung up waiting to fund and had dramatic impacts on pricing, waiting for locks to finish and whatnot, because they're waiting for 4506s to come back because the government can't get their act together and put a budget and finalize and pay the bills that we agreed to pay. So that's a whole different other subject.
So that's another reason why the loans are even taking a little longer now.
Well, there's other verification processes that go through. Now, we still have our own risk management guidelines and whatnot, but on alternative lending for a wage earner, it's just a W-2 and check stub. Okay, that's it. Okay, there's written verifications on institutional lendings that have to comply. Our verifications usually are verbal or electronically via email. So there's an elimination of time. Now, the normal time for a loan, worst case scenario on an average for us, start to finish, is we're funding and we're recording a loan usually in 21 days.
Wow.
So yes, mortgage professionals, you actually can close a loan in less than 30 days with our type of products.
Yeah, I've seen these emails and advertisements come over, and I see it, and I go, man, I just don't believe that.
Well, you see, there's institutional lenders that are saying that they're actually performing on that, but a lot of times there's a lot of prep time that they're not disclosing also. Now, I talk about prep time as when the mortgage professional is actually working with the borrower to put together all their documents. I mean, most borrowers do not have a scanner, do not have an email, do not have a fax machine at home. Sometimes they have that available at work, but you're also dealing with life that's going on in the meantime. So there's a lot of other things that impact time. That's why when you use our type of loan, now the one fantastic part about our loan is that it is it could be a temporary loan to get back to institutional lending. That's why there's, we call the topic of no prepayment penalties, which is very important for alternative lending products. So there's a lot of benefits that. And now when we talk about the process, 30 days, I don't know how many people are getting institutional loans closed in 30 days. I like to say, I think the number that is being told to me, now I'm not firsthand, I don't do institutional loans, but the numbers come to me is about 45 days.
Yeah, so, I was just about to say 40 to 45 days.
Yeah,
that's
usually,
my experience.
That's usually the norm that I see. Now, sometimes you might get something closed a lot quicker. The other challenging issue has to do with valuations. See, valuations are usually done at the end of an institutional loan or somewhere during the process where you're finalizing, you're coming to the end. On an alternative lender, it's about the collateral, it's about that. Those issues are usually addressed right away, so we understand what's going on in the market and in the neighborhood. And because we are alternative lenders, we know what to look for. So in other words, whatever your story is or whatever the situation with the property is, you're not going to shock us by telling what happened. See, you don't have to worry about hiding all the stuff that happened. You just tell us exactly what's going on, tell that mortgage professional. We know how to deal with the picture of the story and understand that everything matches up. And a lot of times, a lot of those things aren't even relevant.
So it actually become a little more easier to get a financing through you guys, considering all the FHA, when you're applying for an FHA loan with all the property issues that come up.
It is easier. It is easier using that approach with the FHA. But remember, in all fairness, you're talking about a larger down payment as opposed to somebody that's trying to qualify for FHA. Now, condition of property, very important. If we're looking at a property and it's all cosmetic and we understand that it's cosmetic because of our experience in our alternative lending, we're not going to hammer the real estate agent and whatnot for cosmetic. We understand there's cosmetic. And of course, if there's functional issues, if there's some kind of issue, functionality issues or safety issues, then obviously we'll address those just like any other lender. Also, we'll deal with illegal additions. Sometimes there might be a workmanlike manner issue that we will not require permits. But again, those are all different case-by-case type situations depending on how we'll look at. So there's a lot of other issues that factor into loans. And wouldn't you rather like to find out in the first week or week and a half of being in an escrow than finding out at day 45 that there's an illegal addition or there's some kind of functionality issue or the property was just bought and sold or transferred 3 or 4 different times in the last 6 months and now there's an issue of chain of title, or maybe there's clouds on title. I mean, there's a lot of different issues that impact a sale, and if you're not really well versed on what's going on, it can just completely shut down, and it could
fall apart.
It could if you had a legitimate explanation for the whole thing, but if the lender is not willing to listen to that story because they're all automated and somebody back east in a call center is the one that you're really talking to, don't really understand how to address that because their lack of experience, guess what? That's why you need to go to a mortgage professional
and have a face-to-face, huh?
And actually know exactly who you're dealing with.
Well, because back when I started, that's what we did. You know, when we couldn't explain something on paper, then we had a face-to-face with the lender, and we kind of explained the situation to them, and they either declined it, they approved it, or they denied it.
Yeah,
and that ain't happening anymore with a lot of the lenders. No, with the lender and with everything online now. And
give us a call 855-693-4897. Yeah, you can talk to Mr. Frank Williams here with Citadel Servicing Corp. I just wanted to throw up the design deal again real quick. You can have the opportunity to win a $25 gift card to Stevens Steakhouse or a $200 teeth whitening if you happen to guess this the particular design, or call us and ask Mr. Frank a question, or ourselves. You can have the opportunity to win a lunch on us,
right
here at the Real Estate Rent. You mentioned evaluations. What I'd like to just clarify that you mean appraisals,
correct?
Because there are different types of evaluations, and one of those is an AVM.
Right. The lenders are all using the standard inspection, which is the appraisal, and you have the evaluations that are being done, internal valuations, desk reviews, AVMs, which is an automated version. And I'll tell you about the technology. I mean, there's a double side to technology. When I was first doing loans, you're right. There was no fax machines. Well, actually, the thermal paper was just barely coming out, but you couldn't use it. You could not email in documents. I mean, we had to package them up and run to FedEx, which was the only one. I mean, it was just crazy. So now there's a lot of streamlined things that can make things a lot quicker. But getting back to valuations, each lender is going to have their requirements also, and that is also another version of overlays. So you have to be concerned with how long the sellers own the property. Again, you're talking about investors buying up properties, fixing them up. There's a lot of different other things that impact the value of the property, what's going on in the neighborhood, current existing foreclosures, short sales, etc. But the AVMs are one thing that banks are using almost on every single property, just because they want to get an actual automated response on what's coming out of that neighborhood. And sometimes an appraiser, the appraiser's database or what's going on MLS or whatever they're using as a source might not be up to date, or might not be that accurate. So there's a lot of different ranges that are going on with the valuations for lenders.
I see. We actually had an appraiser on a few weeks back, and we talked about HVCC, the Home Value Code of Conduct, and this is a regulation that came across to the lending industry now a few years back, but they seem to be loosening up a little bit on that. And does your company are they governed by HVCC?
Well, we follow those rules just because it's about a compliance issue. It has to do with what's being regulated. The HVCC, what I call flexibility that we offer, is that if you go to Wells Fargo or you go to a different bank, institutional lending, and that loan falls out and cannot get closed, well, as long as they follow the HVCC protocols, we will utilize that appraisal. So we will not have to do another appraisal, create another time. We'll use that one. So our flexibility is that as long as it has the HVC certificate, we'll use that immediately. So that way there's no issues or no downtime, and immediately goes right into review. Matter of fact, we have actually one that came in just yesterday from another lender.
We're coming up on a break. Don't touch that mouse. We'll be right back. Stay tuned. We'll be right back with some more Real Estate Rant.
Been in an accident? Then you need your vehicle professionally repaired. That's exactly what you get when you bring your vehicle to Greg's Auto Body Repair. 3 quotes within minutes. We will provide everything you need for a hassle-free auto body repair, from an accurate estimate to working with your insurance company. We will get your vehicle to its pre-accident condition as soon as possible. Greg's Auto Body has been serving Los Angeles County and local cities since 1970. Call us at 562-789-1300.
Looking for a delicious, fresh family meal that's ready when you are and easy on your budget? Welcome to Piara Pizza. We make our pizzas with handmade dough, 100% real cheese, and tomato sauce blended with our own spices. Nothing is ever frozen. We always have large pepperoni and cheese pizzas fresh and waiting for you for only $5. Or choose one of our specialty pizzas. We have veggie, meat lovers, supreme, and Hawaiian. Add an order of our amazing hot wings, cheesy bread, or breadsticks. Our locations are ultra modern, ultra clean, and open 7 days a week. Visit any one of our locations today. Or check us out on the web at www.piarapizza.com. Piara Pizza. Fresh, hot, and ready for you when you come in. Stop in for your Piara Pizza today.
The Share Foundation is the health division of the Coy Chiropractic Institute, a 501c3 509A2 public nonprofit organization dedicated to the growth and development of the natural health care services, in particular through the chiropractic profession, offering health services at the Share clinics in the greater Los Angeles area. Your donations can help in expanding these facilities across the nation, research programs, and public education, thus offering a solution to the many of the health challenges we face. Your donations are tax-deductible and can be sent through our website at www.sharefoundation.com. That's www.cherfoundation.com by clicking on the donation button. Thank you.
Number one. Number one.
Is that a stutter or as high as you can count?
I was ordering number one tequila.
Everybody's asking for number one.
Great, another fancy bottle.
These guys are true artists. Never compromise integrity. They make tequila
Come
the
on.
old-fashioned way. Never mass-produced.
So what are you saying?
I'm saying have the number one. Anything less is number two. Number one, tequila.
Everyone, even Elvis loves Firehouse Chefs.
Catch FHC Radio every Wednesday from 8 to 9 p.m. on the Rant Radio Network.
Live from the Rant Radio Network,
You're listening to Real Estate Rant with your host, Alex Alanis,
and your co-host, Mr. Alonso Rodriguez.
No problems, just solutions for real estate needs, hot topics, and controversial chat. And we are back here at the Real Estate Rant Radio, here at the towers of the Rant Radio Network, what we call the rarefied grounds, or what did I usually call it?
The holy stomping grounds.
The holy grounds? The holy grounds of the Rant Radio Network. Up on the last segment, give us a call, 855-693-4897, or you can email us, realestaterantradio@gmail.com. In studio today, we have Mr. Frank Williams. Let's throw up the design deal. Mr. Pantalones already beat me to it. $25 gift card to Steven's Steakhouse. If you can guess this design of home it
looks like we're going to lunch, Alex.
That's what it looks like. You know, if nobody wins the card, I guess we're going to go get a steak, right? We're going to grab a steak. Mr. Frank Williams from Citadel Servicing Corp. Alternative lending, filling the gap between conventional lending and hard money. And I'll be honest with you, just sitting here listening to you, Frank, I've got a few clients for you.
Excellent.
Yeah. We were talking about HVCC and appraisals. Now, yesterday you had mentioned appraisal waiver.
Right. Well, that's one of the benefits of institutional lenders and I'll say one of their overlays. The fact that you have a couple of institutional banks putting together, their little checklist of the borrower, how much down payment they're putting down. A lot of times they'll sit down and they'll go, wow, this formula adds to an excellent borrower, very low to moderate risk. So in a way to speed up the process and being able to close a loan, you can knock 10 days out of your whole process just by getting a waiver. So what they're doing is they're issuing an appraisal waiver, and that actually saves the borrower the cost of an appraisal.
So let me understand this. That means you guys don't require an appraisal?
Well, no, we do. I'm just saying that I was bringing that up as one of the benefits of institutional lending is that they're creating other ways to try to speed up the process.
Is that something new that come up that I'm not aware of?
Because I've never heard of that.
Yeah, there's selective lenders that are actually doing that. So it depends on who you are using for, actual institutional lending. We can definitely talk, and I can definitely, put together. Like I said, I work directly with mortgage professionals mostly, and of course, a lot of realtors call me because they have a scenario. So I'll educate the scenario.
You'll kind of direct them.
I'll direct them exactly which way to go. A lot of times, and I'll kind of give myself a little plug here. I set up my Twitter with the assistance of my starving college student down at UCI. You can follow me on Twitter at @smart_lender to text questions. You can also find me on LinkedIn. You'll find me Frank Williams, and of course, if you see the mugshot on there, I'm Latino, so you'll know it's me. And
give it to us again. What's the Twitter address?
The Twitter address is @smart_lender, so it's smart_lender. And you can follow me, and I'll always put different things that are going on.
With the last name like Williams, I'm gonna say, wait a minute, this doesn't match. Something's wrong.
Right,
with
I know.
picture.
I look like a Martinez, a Nunez, pero no soy Francisco.
A Rodriguez, Rodriguez.
Rodriguez, there you go.
That's funny. But anyway, so like I said, I have a lot of real estate professionals will contact me, and it's because of the associations that I'm involved with. Of course, I pride myself with the professionals that we associate with. There's a lot of really good individuals. When you sit there and look at where NAREP has been and where they are now, where California Associations of Mortgage Professionals were and are now, all the legislative combating, lobbying that we're doing on behalf of the borrowers, because we don't want to be in a situation, and unfortunately it is a daily battle when you're dealing with these legislative issues, because you have legislators that are trying to do the right thing, and unfortunately, because of their lack of experience, they'll legislate us into issues that have all these unintended consequences.
Into starving.
It just creates issues that that we don't want to do. I mean, like right now, you have an actual document, and I was actually thinking of something that is coming up because there's so many, but there's actually an actual state of California law that is close to being complete. That's going to add about 300, depending on the type of transaction, they're charging an additional fee for recording fees, which is going to affect realtors, going to affect mortgage brokers, anybody that's doing anything with real estate. If you record a trust, any kind of recording fees, and all these fees are going to be collected and are going to be put into a pot somewhere, and nobody knows what they're going to do. And it's kind of a way to raise money. Maybe for low-income housing, maybe for the budget. Nobody knows exactly what that's for. I'm unfortunately not well-versed enough to know. I do know that if you are taking advantage of a reverse mortgage, you're going to pay more than everybody because of the way the loan is set up and all the documents that have to be recorded. If you're recording a trust, anything to that is going to create additional expenses.
One thing we know for sure, it's not coming to us.
No, it's not coming to us, and that's
why
we're
always the givers, not the takers.
Well, that's exactly what happens. So when you sit back and look at what goes on with lending and with all the legislative rules, which find their place, I mean, let's face it, I'm in agreement with all the things that we have to follow. As a wholesale, because I'm not dealing directly with the public, I have mortgage professionals, realtors that come to me for advice, and I direct them to those lenders, like the ones we were talking about that do the waivers. And I think that's really important with working with professionals that are involved in these associations, because they're up to date with the legislative rules or close to, and they have the mission statements that go with it in their everyday practice. And I think that says a lot to when you're willing to volunteer and do that. So I think that's very important.
Frank,
okay, go
Frank,
ahead.
what would you say is one of your niche products?
I think the one that's most commonly used right now is going to be our 24-month bank statement program for the self-employed or the 1099. I don't want to not, because you have some individuals that don't own their own business, but they're 1099 and they file the same Schedule C as a self-employed or sole proprietor. So if you are dealing with that, you are eligible by supplying 24 months bank statements, and if you cash flow, you will use that and average that out over 24 months as your income to help you qualify for loan. That might be the difference in buying a $300,000 house or a $450,000 house. You weigh the difference on what the difference. Yes, our loan's a little bit more expensive, but guess what? There's no prepayment penalty. So maybe after a few years you establish yourself, there might be a benefit for you to move back into institutional lending. I'm not ever saying institutional lending is not the best. I'm just saying it's the most challenging to get. And that's why our alternative lending is going for the borrowers. Like right now, of 10 people that are looking for a loan, really the number 1, 2, and 3 are probably going to go institutional. We want the overlap of number 3, 4, 5, and 6 that have those credit challenges, that have those stories that need to be told for us to understand, because we're there with the money to really help you take advantage of these real estate buying opportunities, especially the minorities.
But you can help the you mentioned the 1, 2, and 3 borrowers that might use institutional lending, but you can help those people as well. In other words,
Absolutely.
you don't have a particular client or segment of the market that you're dealing with. In other words, your lending practices, you can pretty much help anybody.
Yes,
it doesn't
absolutely.
matter.
That's what really is so awesome about what we do, and why I am very passionate about lending and about doing our financing, is the fact that we can help every aspect of the credit scale. I mean, we're dealing with people in the 500 credit scores all the way to the 700 pluses. Everybody has a different scale, different issue that they're trying to contend with. A lot of times, the classic issues that happen and impact the family: death, divorce, medical illness. We had a family that was doing what we call a gift of equity transfer purchase. Their son was buying the property from the parents because they have medical issues. So instead of having their assets depleted by their transferring their assets and doing that, and then there's other issues that they're doing to be able to obtain the medical. So there's a lot of different situations that happen that we can take a point. That's a come. I want to plug our national convention for NAREP is happening actually at the end of the month. For any mortgage professional, any real estate professional, any service provider that wants to be part of an awesome organization like NAREP, we're having our national sales convention, or excuse me, not sales convention, our national convention, excuse me, September 29th through October 1st, actually at the JW Marriott LA Live. You have a lot of training, a lot of institutionals, lenders. You have a lot of people coming with different products to help realtors from all over the United States. And if you look about who's buying the properties, they're largely the minorities right now that are moving into the and of course the largest segment, of course, is the Latino population.
Well, the minorities are the majority.
Right. Well,
when I was a kid,
that reminds me of a painting that was there on over there on Soto Street, Soto and Olympic, in the projects. There's a painting there that they painted on one of those apartment complex. It says we're the majority, not the minority.
Right.
Oh, okay. Yeah, and that's the truth. I mean, here in Southern California, Latinos are in the majority. And why we're still called minorities, is beside.
Well, it's just.
But you're a Williams, aren't you?
Hey, look,
I'm a brother from another mother, man. I'll tell you.
It's so funny. I grew up in Santa Ana, and I earned my last name from all my brother Chicanos in the neighborhood. Trying to figure out, was I Latino or what? So I'll tell you right now, soy Latino. Okay.
Just call him Miklo. Huh? Miklo.
Don't call me Miklo.
I actually heard a routine with God, I can't remember his name now.
Paul Rodriguez.
Paul Rodriguez. He was talking about how he was doing stand-ups at different countries, and he was realizing, he was going to Europe, he was going to South America, and that most everybody spoke Spanish. And then he said, man, Mexicans are with everybody.
That is awesome.
So,
that is awesome.
We're coming up on the end of the show. I just wanted to put a last little reminder here about Mr. Frank Williams. Thank you for joining us on the show.
Thank you.
Frank is with Citadel Servicing Corp. You can reach him at 949-887-1087, or you can email him at frank@capital-df.com. And what was your Twitter address again, Frank?
It's smart_lender, smart lender. You can follow me, or you can get me at LinkedIn. You can find all my information on LinkedIn.
Frank, I'd like to invite you back for another show, possibly, because I'll be honest with you, I think we can go for another show. I had a good time talking about lending today. I learned a lot, and I think I might have some clients for you.
Well, that's fantastic. I'm ready. I'm ready to get working. I always tell everybody, let's get started. Let's get started.
Yeah. So if you wouldn't mind joining us again, maybe we'll have you back next month.
No, it was a pleasure. This was fun.
It was. Yeah, well, I always have a good time here at the Rant Radio Network. It's www.rantradionetwork.com, or you can reach us at realestaterantradio@gmail.com if you'd like to email us, give us a question, or watch the show. We are here to ensure the public trust. And thanks again, Mr. Alonso.
Thanks for tuning in, and don't forget to tune in to Indy 104. Thanks for tuning in to Real Estate Rant Radio.
Make sure to join us every Wednesday at 10 a.m.
on the Rant Radio Network, where we talk about solutions to your real estate problems. The views and opinions expressed by the host or any guest on this show are encouraged to be followed up by a professional tax advisor or attorney, as we are not qualified or authorized to give advice in two areas: legal matters and tax matters.